When you pick a company for research, how do you really go about looking at data points about it? What are the key points that you would kind of figure out about the company? What is the checklist that you follow? That's what we're going to try and cover in this particular video. किसी कंपनी का रिसर्च करते समय कौन से डेटा पॉइंट्स को हमें फोकस करना है, bare minimum what is the set that we want to create for ourselves when we are researching on a company. That's what we are going to discuss in this video. My name is Peeyush and welcome to another video on our channel. If you haven't subscribed to it as yet, please do that right away. Let's jump right into it. When you are analyzing a business, typically the idea is you pick up a company, you start researching on it. The first set of points that come to your mind are how big is the business, right? What is the size of the company today and what could be the size at some point of time in the future? What is the execution capability of this business? How do you know whether this company will grow and they have the capability to grow in the future? How capital intensive the business is. So would the business need a lot of capex? Would it need a lot of debt to fund that capex? Capacity कैसे बढ़ाएंगे? कहाँ से पैसा आएगा वो capacity बढ़ाने के लिए? And how do they make that money and how do they kind of get that from shareholders or lenders essentially? And in the course of running the business, is the business working capital intensive? Is the money getting tied in receivables? Is the money getting tied in inventory? What is the payable cycle? So you want to understand at least this bare bit about any particular company that you're doing research on. So we have a checklist and we'll use a bunch of examples around this from Screener to try and look at some of these questions and what answers do we get to that, right? So first question that comes up is to understand the size or scale of the business. So how big is the business? So the basic data points we should have about a business is what is the market cap? What is the sales? What is the EBITDA? What is the net profit? So if I ask you a question on, let's pick up a business like Titan, right? We go and pick a business like Titan, go to Screener, click on this. So the bare minimum we need to know is what is the market cap? 3,22,000 crore. What is the sales? So last year was about 60,000 crore. What's the operating margin? About 9 to 10%. Historically was 12 at its peak, but 9 to 10 is where it kind of operates at. And roughly profit is about 3,000 odd crore. If you look at a margin, roughly 60,000 crore sales and 3,000 odd crore profits, 5.5% margin is what you see, right? Pick up another one. Let's say we pick up something like a Trend for that matter, right? Look at what's the market cap, 1,84,000 crore, right? What's the sales? About 17,000 crore, operating margin 16%, PAT margin about close to 9% or so. So 1,500 crore profit. You get a sense of what is the current size of the company. And then you can ask a question of how big can it become, right? So what could be the market cap in a steady state for something like a Trend? So you could look at global peers, you could look at companies and understand. Pick up another one. Let's say HDFC Asset Management Company, HDFC AMC, right? 1.2 lakh crore is the market cap as you see there. Sales is about 4,000 crore. Operating margin, interestingly, is close to 80%. Very, very strong business, scale business, costs are limited. And once you kind of achieve a large scale, your profitability is significantly higher. PAT margin itself would be close to about 60% or so. Of course, other AMCs may be slightly lower, but you would at least understand that the AMC business is a business where margins are very high, whereas some of the other business margins may be very low or much lower as compared to something like this. So the first things that you want to kind of focus on are market cap, sales, EBITDA, profit at this point of time. That's the first starting point. So when you pick up a company for research, this is the bare minimum that we start with to understand what is the current size of the business. The next question would be, can it grow, right? So how much can it grow is a question, but then to check that, we need to know whether they have executed in the recent years. What has been the growth in the past few years? So can I go and check 5 years sales growth and 10 years sales growth and 5 year and 10 year profit growth as well, right? The idea is to check whether the management A has been able to use the opportunity in the past. This gives us 2 or 3 inputs about the business. One, whether the industry is growing. 2, whether the management is able to capture that growth or not, right? So let's go and check. For example, you look at HDFC AMC and just on Screener, just below this, you will find compounded profit growth. You'll find compounded sales growth. You can see sales growth is like 14% for the last 10 years, 14% for the last 5 years. Profit growth has been 19% initially and 14% for the last 5 years that you see. Pick up this for, let's say, Titan, the other company we were looking at, and we go to the P&L, go below this. Solid sales growth, once again, 18% and 23%. Profit growth has been slightly lower, which means margins may have come off, something that we have evidently seen in the operating margin numbers as well, right? Pick up other companies like, something that has done really well in terms of growth in the last few years. So pick up something like a BSE Limited, right? Again, size 90,000 crore, market cap is what you see. P&L, look at the sales, 3,200 crore, profit is about 40% of that, so 1,300 crore. But the interesting part is sales growth over the last 5 and 10 years and profit growth over the last 5 and 10 years has been phenomenal in that context. Another one is Dixon Technologies, the electronics manufacturer, EMS player, essentially. Again, market cap 1 lakh crore. Go and look at the profit growth over the last 10 years and 5 years. That's been about 50 to 45 to 52%. Sales growth has been about 42 to 55% across that period. So these are managements who have basically grown and there is a capability to grow. You can also actually run a screen here on Screener and, go and basically type, okay, what has been the sales growth over 5 years. And I can actually check companies that have grown less than 10% and have a large size. So market cap greater than, let's say, 1 lakh crore, but the companies have grown sales at less than 10% over the last 5 years. And you'll get a bunch of these companies. You can actually go and edit these columns if you want and, put whatever parameters you want for these companies. But basically, these are companies where sales growth over the 5 years has been low. Second last column here, if I click on that and I sort of put, in a descending order, you'll see some of these companies over the last 5 years, sales growth has been very low. Similarly, you can run a screen on profit growth and try and find out the ones which have grown fast, the ones which have grown slow. I picked out the ones in the large companies that have not grown at 10%. You can put a greater than sign and find out what has grown more than 10%, right? So that's the second factor that tells us whether or not the company has been able to actually execute in the recent past. So that's the second point. The next set of points that come is how capital intensive is the business? How asset heavy is the business? If you look at the business size and scale, you look at the balance sheet, go and find out what is the total assets. How much asset base is needed to get a particular amount of sales? And then out of that, how much is fixed asset or long-term asset, right? So do you need CapEx, a lot of it, to kind of run the business? And then compare it to, let's say, debt versus total liability. So is the CapEx funded by debt? Correct. So let's go and check this as well. Let's go back to Trent, right? And we will see just a comparative study here. Sales 17,000 crore. Look at the balance sheet size. Fixed asset is about 3,800 crore, right? So ballpark 4 times of fixed asset. If you were to calculate a ratio like a fixed asset turnover, the number would be sales upon fixed assets, and that would basically work out to something like 4.5 in this particular case. Total assets is 9,400 crore, out of which fixed assets are about, ballpark, close to 40%, right? Pick, on the other hand, something like a Hindalco, right? If you look at Hindalco and you look at its sales, it's about 2,38,000 crore. Balance sheet size almost similar. Trent was about half, 9,000 crore. And out of this, half of it is fixed asset and capital work in progress, which is going to go and get added to fixed asset. So here you see a bulk of the amount in fixed assets that you see, right? There are some businesses that don't have too much fixed assets, right? Take Infosys, for example. Bulk of the balance sheet would be in the current assets, right? Fixed asset is 30,000 crore. They would have this much of cash and cash equivalents and investments as well. So bulk of the balance sheet is not in fixed assets. We know it's not an asset heavy business and doesn't need too much debt. But if you look at an Airtel, for example, you will see that on the balance sheet, the size of total assets and total liabilities, 5 lakh crore, bulk of which is fixed assets. Like 80% of that, 75% of that is fixed asset. And with 5 lakh crore of assets, you're generating about close to 2 lakh crore, less than 2 lakh crore of sales. So this is a very asset intensive business, and it needs, on top of that, a lot of borrowings to be able to run it, right? There is a large part of this asset base is coming because of CapEx that you have done using a lot of borrowings. So you start figuring out in a particular company, how much money do they need to do CapEx? Take DMart, for example, right? DMart has about 400 stores, give or take a few. If I look at the balance sheet, and I look at fixed assets number, that's about 16,000 crore. This is the net number, remember, not the gross number. So to put a new store, they need about 50-60 crore of capex. That's, you can find out from some of their documents, and or divide the capex of last year by the total number of stores added. right? How can you find that out? On the cash flow, you can figure out what is the cash flow from investing activities within which you will see assets purchased, and you'll see that's about approximately close to 3,400 odd crore. From 3,400 crore, they added about 50 odd stores. Some of it may have been maintenance capex. So about 60 odd crore per store is what they need. Profit kitna hai? How much is the profit? About 2,700 crore consolidated, 2,900 crore standalone. So basically, you're generating enough profit, just cash profit, to be able to sort of go and put up a certain number of stores. This business does not have too much receivable, so practically everything is going to come to cash flow. And that can add 40 to 50 stores just from pure profits itself. So when you look at the balance sheet, again, you see 24,000 crore is the balance sheet, but the P&L will show, roughly about 60,000 crore sales coming out of it. So some businesses don't need a lot of asset base. We can figure it out by a relative comparison of the P&L and the balance sheet numbers. And what you want to kind of focus on is what are the total assets, what are the fixed assets, and what is the debt versus total liabilities. That starts giving you a framework about, does the business need a lot of money to grow? I'll take another example here. Take the example of Steel Authority of India. Right. So that's here. Sales 1 lakh crore, balance sheet size 1,36,000 crore. They're doing a lot of capex. This, remember, is the net number. 73,000 crore is the fixed asset. They're saying we will do 1 lakh crore of capex in the next 7-8 years, right? But if you look at the P&L and you look at the profit numbers, basically, of course, you can add depreciation to this to get to a sort of a cash figure that comes out. But in the last many years, barring 1 year where you had like a 12,000 crore kind of a profit, the max profit is 4,000 crore, and the average would work out to something like 2,500 crore. So if you have to do a 1 lakh crore capex, this has to be funded through debt predominantly, or at least half of it has to be debt. And you need good profitable years to be able to pull that off completely. So that's some kind of analysis that can come out with respect to your understanding of the assets and the data points about the business. And finally, you want to look at how working capital intensive the business is. Is the business using a lot of its, day-to-day cash in terms of working capital management? So what is the cash flow from operating activities, and what are the receivables, inventory, and payables? Are they growing or not growing? So it's expected that if sales is growing by, 50% or 100%, receivables or inventory will also grow by that same level. But if it is growing by more, then you want to be a little bit careful about the business. So let's say sales is 100, receivables is 20. It's expected that when sales goes to 200, receivables will go to 40. But you spot in a company that receivables goes to 70, which means the incremental sales that has happened from here to here, which is 100, has predominantly been funded by 50% of that being receivables. So you want to be careful with this. So you want to look at, numbers of cash flow from operating activities of the business and compare it to the net profit. There are companies, so when you go from net profit to cash from operating activities, you have net profit plus depreciation, ignore the interest adjustment for now, minus change in net working capital, and you should get cash flow from operating activities. So logically, if a lot of cash is getting tied up in terms of working capital, then you will realize that CFO will grow at a much smaller rate than the net profit growth. And that's your point that you want to kind of check out with respect to companies where a lot of money is sort of tied up in terms of inventory. So I can go and check cash flows and see if we are generating enough cash as well in a particular year. This is SAIL. You can look at other companies where, the profitability growth versus the cash flow growth may not kind of match evenly across the years. Once again, you can run screens here. So you can basically go and find, let's say, run a screen where you can say cash from operating activities or cash from operations last year was below, let's say, operating profit last year or net profit last year. And you can then dig a little bit deeper into companies that can come around that, right? So you do want to kind of look at the flow of how this comes up and look at this data point in the context of these parameters. So just to summarize all of it, you are trying to look at how big the business is. For this, we are looking at sales, profits, market cap, operating profit, etc. How has been the execution capability? To answer the question, how big is the business today and how big it can become in the future, you're looking at this. So you want to look at 10-year and 5-year sales and profit growth at the very least. You can, of course, look at more numbers. How capital intensive the business is. You look at total assets, you look at fixed assets, and you look at kind of what kind of sales is coming out of it. In essence, you are trying to find the fixed asset turnover ratio. Is it being funded by a lot of debt or borrowing? So what is the proportion of debt in the overall balance sheet? You want to check that. If it is too high, then how do you kind of look at it? And how working capital intensive the business is, right? Remember, this is a starting point. This is what you start doing when you're researching a company. This is not the end point. This is the bare minimum you should know about a company if you're researching on a company. And that's what we wanted to cover in this particular video. That's it from me. Thank you.